Welcome to the Life in Transitions Experts YouTube channel, Facebook group, and podcast. I'm your host, Courtney Rollins. I'm here as one of those folks who try to help you through some of the toughest and challenging transitions in your life. And one of the things that we really harp on this channel is making sure that you have your things in place, your estate plan in order, your house in order so that you have permission to live. And a lot of that looks like making sure your loved ones are protected. And we've been talking a lot about insurance and how that can support and help you with your goals. And today we're going to break down the three main types of insurance. And I mean, really, there's two types, but one is a variation of the other. But we'll go into that. We'll just try to keep it as simple as possible so you can understand because maybe you're trying to decide what type of insurance you want for your family. You're trying to put together your estate plan so again, you have permission to live knowing again your loved ones are protected. So and you may start doing some research and you may have heard terms like term life, whole life. And what's the difference? There's people in different camps who say whole life is not worth it for these folks. Some people say term life is trash. Some people say you absolutely have to have term. Some people say you absolutely have whole and all these different things. But what is it? And the truth of the matter, from my humble opinion, is that it really all depends on your situation, what your wants are, and what your needs are to find the right type of insurance that fits what fits you. So let's go into them. All right. So we're talking about life insurance here, and really the two main types, and there's different variations, is term and whole life. When you think about term, you're thinking about well, termination. It's a term. It terminates at a certain amount of time. And let's actually just go into to term right now. So term, it's for a specific amount of time. It's quite often pushed to folks who are particularly younger when they don't have when they hopefully have a longer life expectancy and and they don't and they want to save some of their funds because as you'll see quite often the premiums are lower, so you know that in between that time, if you pass in the time of that term, say you have a 10-year, 20 or 30 year, if you pass, then the face value, however much you purchase, will be paid out. When the term ends, however, and you pass away, let's say at an 11th year of a 10-year term, and you didn't renew it, there's you're not they're not obligated, the insurer is not obligated to pay you out. So look at some of the pros. Some of the pros is very affordable. It keeps it very simple. You put in those low premium ins, saves you a little bit of money. Maybe you can reinvest in other places, and that's what a lot of folks strategize. Say take the money you would have used in the term and reinvest it in other places so that you'll have it for retirement and things of that nature. It's like I said, simple. So those are some of the cool things about term. Really designed definitely for folks who are, or quite often folks who are younger. Um, and really, again, it depends on your situation. If you're younger, you may still decide on a different insurance based on what your wants and your needs are. Some of the cons is that the insurance is temporary. The coverage is very temporary, and the biggest con for a lot of folks is it doesn't build any cash value. So you're putting money in month after month into these premiums. However, you're not able to use it, which a lot of very intelligent people do for loans or when they actually need it for other funds. Now, there are certain riders you can put in to hopefully get some of your premium and things of the nature back, but it doesn't accumulate in cash value like a whole life insurance would. So that is a term life. Now, if we look at whole life is a permanent life insurance. It stays with you your entire life. All right. That's and it has a cash value that builds up. But let's look into there. Okay. So some of the pros of the whole life insurance is that again, it stays with you your entire life. And another pro that a lot of people appreciate is that it accumulates cash value. So those premiums that you're paying, you actually are able to, as it builds up, take out loans against your own life insurance and repay yourself at an interest. It's going right back to you. And depending on, talk to your tax attorney or CPA, but there's some tax advantages or tax shelters that are available when you're using your insurance. I mean, you still will need to pay taxes on the interest that's accrued and things of that nature. But again, talk to your CPA. But it's great for folks who want to have sort of like a savings account as well as having protection when they inevitably pass away and knowing their loved ones are protected and knowing that it's not a term, it's there with you the entire time. Now, some of the cons is quite often the premiums are higher, as well as there's not as much flexibility when it comes to adjusting the property. Now, again, there are riders. When I say riders, those are provisions and things placed into the insurance contract that, so for instance, accelerated death benefits, or things that allow you to have more advantages or take or have more provisions based again on your desires and your needs. But that's whole life. Now let's look at another form of whole life. This is the third one we're going to talk about. That's universal whole life. It's like whole life with a little bit more flexibility. This is for folks who are who are really interested in investing or really interested in have maybe a higher risk tolerance. I mean, it really depends on how you set it up, as I say that. But the main thing about a whole life is that it is flexible and it does act build cash value. You can adjust the premiums based on what you want, what you need there. There are opportunities for some of the funds to be used in the stock market, so that it can accrue benefits. There are certain provisions where you can actually take high risk and your premium and your not the premium, but the value of the policy can't be guaranteed because you're playing in the stock market, for certain types of universal life insurance. But it can be a great type of insurance for folks who have a little more risk, high risk tolerance, as well as who are interested in some of the flexible and ability in the investing. Again, the cost can vary because it can be market based and it can be pretty complex. So this is definitely one that folks who would need a trusted advisor to speak with about. All right, folks. So that's the difference between whole and term, and then we broke down a little bit whole and another whole, universal whole. So my name is Courtney Rollins. I love sharing information like this. Would love to talk to you, join you on your journey, see if I can help you in any way. Please reach out at Courtney at estateproservice.com. This is the Life and Transitions Experts channel, and as we always say, LITE, let your light shine. Cheers.